2026, week 2. Happy Saturday! Hey! I ain't seen y'all in 7 whole days. And not a word from you. Okay, I don't know why Tony Braxton keep coming to mind, but if you don't love that song, I don't know why, but I do. Hi, everybody. I hope everybody is having a phenomenal weekend. And listen, I know the year just started, the month just started, but if you have encountered some lows, you have encountered some highs, I'm going to say excellent to both. And the reason why is because no matter what you encountered this week, you are still here in the land of the living to tell that story. And I don't know what's greater than that. You follow me? So it's okay not to be okay, but it's not to be okay to stay in that place of not being okay. Did that make sense? You need me to run that back? But look, let me tell you, you know I like to kick off the show with fun facts. And I be thinking about fun facts like daily, like what I want to talk about, what do I not know, what is something that is potentially irrelevant, but I feel that I need to know it. So as I said and I thought about it, I'm like, listen, we are in tax season. Not only are we in tax season, but every conversation you have, some form of money or currency is going to come into the conversation. At some point, something is going to be said. So you know what I said? Why not do your fun facts on money? So that's what today's fun fact is on money. Okay, so fun fact about money. First things first. Martha Washington is the only woman to have her likeness appear solo on U.S. paper currency notes. Her image appeared on the $1 silver certificate, first issued in 1886 and discontinued in 1957. I tilt my hat to her because to have a female face on currency speaks volumes. And if it happened before, who says that it can't happen now? Right? So as I was researching this, I just became so elated at we don't give women the credit that we need to give them. And so I was happy as I was doing my research and reading this. But I became more excited when I found out more about money. Let me tell you. So, dollar bills. You know, it's even a couple songs out, dollar bill, y'all. It's a lot of songs out about dollar bills. But check this out. Dollar bills were not always green. Go figure. If it's money and you think green, like who came up with the color green? Why not purple? Why not orange? Why not blue? Why not pine forest? Why not whisper gray? Like who came up with green? But colonial money, for example, was tan with black and red ink. It wasn't until the Civil War that the government started using green ink to print paper money, where it got the name greenbacks. Now, the color was selected because the ink did not fade or easily decompose, which protected against counterfeiting. So out of all the colors that's out here, they chose green because you couldn't counterfeit the money. But we still have counterfeit money. However, just to think about this protection that they had back in the olden days is amazing. I don't know about you, but I found this amazing. Now, the official adoption of the dollar sign in the United States can be traced back to 1785 when it evolved from the Spanish symbol for pesos. I never knew that. It's believed that the dollar sign originated from the abbreviations, the letter PS, which was used to indicate Spanish pesos in America. Gradually, the S came to be written over the P, eventually making it the monophone sign into the dollar sign what we know today. And you can go on YouTube and see a lot of stuff, and it's also a show that I like to watch on Tubi. And depending on the time of night I'm up and I can't sleep and I'm supposed to be praying, but I'm not because I'm watching TV. It's a show called How This Is Made. And when you see how all of this stuff is done and how it's made, it just makes you think about, like, wow, this is so amazing. Like, these people were brilliant who thought of these ideals. So why can't we do that now? Now, here's what caught me off guard, and I had to research this, and I even went and talked to strangers as I was walking, just asking them, were you aware of this? So, did you know that money had a lifespan? I did not know that. Let me tell you. The dollar bill's lifespan is 6.6 years. The $5 bill lifespan is 4.7 years. So although $5 is more than a dollar bill, the dollar lifespan lasts longer than the $5 bill. I'm not done. The $10 bill lifespan is 5.3 years, whereas the $20 lifespan is 7.8 years. The $50 bill is 12.2 years lifespan, and the $100 bill is 22.9 years lifespan. Now let's think about that. If you could right now, would you be able to save all the $150 bills because their lifespan is so long, and potentially in the future you would be able to get money from that? I know I couldn't do it. So guess what? Just the thought of it is amazing. But in my mind, I'm going to think I could do it. But it's okay. So it's fine. But that concludes my fun facts for today's show. I hope you all got something out of it. And again, if it's something that you want to know, if the fun facts are just not doing it for you and you want to incorporate something else, I invite you to the octagon/round/rectangular table. Send me that comment. Let me know what you're thinking. Let me know what you want to hear about. Because again, we're talking about finances, and good icebreakers and fun facts is always a good way to channel that energy, right? So, I got some special birthdays coming up. Yes, we're still celebrating January birthdays. So if you're out there and you're celebrating, happy birthday. I wish you nothing but the best. Please celebrate in decency and in order. Remember, if you get birthday cake, I would like a slice. I can tell you where to send it. I can meet you. And I love buttercream icing. But if you get whipped cream, it doesn't matter. I just like birthday cake. But my special birthdays is one to my great niece, Osha, but I call her my chocolate diamond. And her birthday is on the 14th, which is in like 4 days, right? Yeah. She'll be 5. No, I'm sorry, she'll be 4. If she heard me say that, she would politely tap me and be like, TT, I'm these many. I'm 4. So yes, my baby will be 4. And a good friend of mine, and I always tease her, always, Nicole Irving. Happy birthday, ladies. Please celebrate. Please enjoy yourselves. Please have fun. And please send me some birthday cake. Please. Now, I have a disclaimer for today. And my disclaimer is, because of the topic and because of the season that we're in, I'm going to open the phone lines. The number is area code 312-837-7219. 312-837-7219. What I am going to ask is that when you call in, if you call in, please state your name, where you're calling from, and your question. We want to be mindful of the time, and we also want to be mindful in case someone else has a question. If you're uncomfortable calling, please put your comment, suggestion in the comments so I can read them and address them. There is a chance that our show will exceed 60 minutes. And the reason being is because of the show that we're having today. And I'm going to get more into that later. I just love leaving you with that curiosity. Like, okay, she opened up the phone lines. I was online and didn't see a guest. So what's going on? Is she giving away something? Yep, keep that curiosity coming because I'm going to tell you about it shortly. Woohoo! Okay. Now, before we jump into today's show, of course, I'm going to keep bringing these announcements weekly because, as we all know, things change. And because you're so faithful in tuning in, I want to continue to be consistent and be faithful in delivering these announcements, right? Right. So here they go. Again, estimated tax payments for the fourth quarter of 2025, which is October, November, and December. That payment is to be made on January 15th, if not before then. So if you have not made your estimated tax payments for quarter four of 2025, you are still able to make those payments right now. And of course, before or on the 15th. Again, we're in that big season, tax season. So, of course, the calls and the text message are coming in. Shavonna, when am I going to get W-2s? Shavonna, when am I going to get 1099s? So, here is how it goes. Per the statute, companies have until January 31st to send all of your documents out. They can even be postmarked for January 31st. However, because the 31st falls on a Saturday of this month, it has been extended to that following business day, which is Monday. That's going to be February 2nd. Here is what can happen. Your job can send you your W-2s or your 1099s. Before then, you could have them emailed to you, or they can be passed out to you when you get your check stub. It just depends on how your company is structured. You can call your HR or payroll department and ask them, do they have an ETA on when your documents will be sent to you? But technically, they do have until February 6th. So we want to be mindful of that. Now, the IRS has released the dates for electronic filing. So if you want to be in that first batch, taxes go out electronically when they're accepting it. It's going to be the 26th of this month, January 26th. Now, if you have not done so already, and I have been talking about this Saturday after Saturday, please create that IRS ID Me account. There's going to be a lot of things that you will not have access to when it comes to the federal and state entities if this account is not set up. So please take that 7 to 13 minutes to set it up. And to give you a heads up, have a photocopy of your driver's license or ID back in front saved in your phone, because you're going to have to upload that to their system. Last but not least, especially based on the information that I just provided for you, you want to go ahead and make your appointment with your accountant or your tax preparer. Again, I am also going to be giving out some updates and some information that you're going to need. I needed it, so I know you need it. So let's jump into the show today. Like, I'm really excited about this show today, and I can't tell you why. I'm just excited, right? Okay, so Let's Talk Finance. Welcome back to Let's Talk Finance podcast. Yes, on Saturday. And if this is your first time joining us, thank you and welcome to the family. Whether you're tuning in live or if you're going to go back and watch the replay, thank you for spending your time with me. I truly appreciate it. Here on Let's Talk Finance podcast, we like to break down finances with clarity, faith, and empowerment. There is so much that you need to know about your finances and understanding your money. And when we look at money, we think about numbers, but it goes way beyond that. And we got to have that foundation. We want to be confident and we want everything to align a certain way. So we have to have those financial boundaries and we also have to have financial clarity. So today's show is about awareness, preparation, and staying ahead. Our topic today is, let's talk about this, 2025 updates. And I know you're like, okay, we're in 2026, so why are we talking about 2025? Because if you file your taxes, we always file a year behind. So we're in 26, we can file out 24. One for the books. You can still file 3 years. So if you did not do your 2024, your 2023, your 2022, you can do all 3 years. Your 2022 cannot and will not be accepted after April 15th, 2026. That's very important, okay? So we're going to walk through some changes and, we're just going to look at everything that's happening and we're going to take it with a grain of salt, right? Because ain't nothing alone, as my homie told me the other day when I saw him, there's nothing wrong with a little sprinkle, just a little sprinkle. So if you got that salt and that food kind of bland, you just need a little sprinkle. That's what we're going to be talking about today, a little sprinkle on these updates, right? Especially when it's about your money. So grab your drinks, whether it's coffee, tea, water, orange juice. Maybe you may be having a cocktail or some wine, whatever it is. Be ready to join in the conversation. If you have to leave, I understand. Thank you for still tuning in. Please don't forget to like, love, and comment. That's so important. We take your feedback. Also, subscribe to their YouTube channel if you have not. YouTube.com. Search Anointed Accounting. I'm going to be giving you this information later as well. Again, that phone number to call in if you have any questions based off the information that I'm delivering today is going to be 312-837-7219. So I done told everybody to get their drinks. I got my cold water right here. And I counted it today like I do every day. I have 43 ice cubes. Yes, I had 44. But it was so small and it was little. As I was drinking my water, it came through the straw. So yeah, okay. Now, let's talk about finance. Let's talk about this. Let's talk about these 2025 updates. And I'm going to start at the very, 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 very top, which is your forms. Shavana, what do you mean by forms? I'm talking about Form W-4 that you fill out and ILW-4. Depending on if your state has state withholdings, you would have to fill out that form. And if your state does not have withholdings, well, of course, you don't have anything to worry about, correct? However, the federal is across the board. One, there is a new W-4 that was released on Monday. If you have not done so, please go to the IRS website, irs.gov, and print out Form W-4 2026. It has been updated. Please fill that form out. Now, as we're talking about that form, let's say that you work 2 jobs. Well, behind the scenes, job one does not know about job two, and job two does not know about job one. So when you're filling out this document, you want to make sure you go down to box C, and you will miss it if you're overlooking it, and you check that box. By checking that box, you're telling both employers, look, this is not my only source of income. I work two jobs. However, I want you to hold at the proper rate. I want you to take out what needs to be taken out, even though I'm making an additional source of income. If for any reason, let's say you're aware of your tax bracket, and if you are, I tilt my hat to you. Thank you. But if you're not aware of your tax bracket, but you make a substantial amount of money, I can almost guarantee that you are in a different tax bracket. What you want to do is you want to go down to the bottom of that W-4, which is going to be line 4C, and you want to have extra withholdings withheld. You want to have extra money coming out so it doesn't bite you at the end of the year. A lot of things have changed. Some people were aware of the IPPN last year. It was individuals who said, well, Siobhan, I never had that. I'm not sure what it is. If you have that IRS ID Me account, you will be able to log in and grab your IPPN from your account. Every year, the IRS also mails you out that form. So if your address is not correct, 9 times out of 10, you're not going to get that form. But if you have your IRS ID Me account set up, guess what? You will have that form. If you had healthcare in 25 through healthcare.gov, the marketplace, please have an online account. Log into that account and print out your form 1095A. That form is so important when it comes to your tax return. You spent money on your health care. That can potentially be a deduction. So please print that form. If you did not have health care through the marketplace or healthcare.gov, then of course you would not need to print it out. However, if you sit down with your preparer and the box is checked no, and your return is rejected for that reason, that means that you had that health coverage. The IRS know you had that health coverage. They're not gonna accept your return until that document is submitted. Now, if you're adamant that it wasn't you, then you and your tax preparer will sit down and follow the proper protocol. When you filing your taxes, and please hear me, bring your last check stub with you along with your W-2. No, you cannot create a tax return with your check stub. No, you still need the W-2. However, due to certain changes that have taken place since the big beautiful bill, you will need to have your last check stub with you for accuracy. So you don't want to miss any of those tax breaks. Have that check stub and your W-2. And since I'm talking about that, I want to talk to the service industry. What do I mean by the service industry? Any tipped employee and you get a W-2. So let's say you're a stylist. Let's say you're a barber. Let's say you're a chef. Let's say you're a DJ. Let's say you're a bartender. Let's say you're a server. Whatever field that you're in and you receive tips, it is very, 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 very important you have that last check stub with you along with your W-2. Now, speaking to the service industry and tipped employees, there are some things that happen within the big beautiful bill that relates to you that will make you smile. $25,000 of your tips will not be taxed at all. $25,000. Whereas before, all of your tips were taxed. But now, $25,000 of that money, if you're eligible, you can deduct up to, listen to those key words, you can deduct up to $25,000 if you are in the service industry. Also, if you're in the service industry, know your tip out percentage. If you don't know your tip out percentage, look in your POS system, which is your point of sale service center. Look in there and you can find your tip out percentage or ask your manager. Here is what I can tell you. If you're tipping money out, that means you're paying your bar back. That means you're paying the busser person. You know how much money you're giving out, which means you know that percentage. So it would behoove you to find out what that percentage is as it benefits you on your tax returns. So I thought you may want to know that. These updates that came in, and it's going to be beneficial to a lot of people. Moving on to the next change, we have the vehicle related deduction and credit. Who don't want to get a reduction or a break on their vehicle? However, some rules apply. Now, I have not memorized them all, so I'm going to read a few of them to you. Now, the vehicle loan entrance deduction. What is that, Shavonna? If you bought your vehicle December 31st, 2024 through December 31st, 2025, you can receive up to a $10,000 deduction. You cannot have purchased your vehicle in November of 25 and say, I can get $10,000 off. Absolutely not. That does not work. There's no finagling the system because the federal government will know, because the documents that you have to provide will have to come from the dealership and it will include your VIN number. So we cannot pull a wool over the federal government eyes. Now, this applies to a car, a minivan, a SUV, a pickup truck, a motorcycle, any one of those vehicles if they weigh less than 14,000 pounds. So I just gave you two scenarios. It has to be under 14,000 pounds and you have to have purchased it within the last 12 months. So basically all of 2025. The only exception would be you purchased it December 31st of 2024 going into 2025. Used vehicles are not eligible. So you can't say, Shavonna, look, I went to the car dealership. I couldn't afford that brand new car, so I got a used vehicle. Can I write that $10,000 off? I would love to, but absolutely not. We can't do it because it's a used vehicle. It has to be a brand new vehicle. Now, we also have what we call the clean vehicle tax credit. That credit is up to now, up to. It doesn't mean you're going to get the full value, but it's up to $7,500. It applies if you buy a new qualified plug-in EV or fuel vehicle. That's it. That's how that works. Now, the purchase must be for personal use and not resale. So you can't buy it for the business. It has to be for personal uses. There's a lot of phase outs and there's a lot of requirements when you're dealing with certain write-offs and deductions. So if you acquired your vehicle for the clean vehicle write-off after September 30th, 2025, you do not qualify for this. This vehicle has to have been purchased before September 30th of 2025. That's very important. Yes. So I know it's a lot of people out here with cars. Everybody went to go buy cars. So The newer cars that you purchased this year, your dealership would have known what information to give you. If you don't have that information, now is the time to contact your dealership and say, hey, I need those documents because I'm about to file my tax return. And it's going to have the information on there from you, which is the seller, that's the dealership, and you being the purchaser, the person who bought it. It's going to also have your VIN number on there. Now, let's take a step back. A few minutes ago, I said, make sure you have your check stub with you, your last check stub, because your check stub is going to have important information on it. The reason why I say that is because guess what? You can get a deduction on overtime. Yay! Look at all these deductions. A deduction on overtime. So I know a lot of people in the world do overtime. Sometimes your overtime outweighs your base pay. So make sure you have your last check stub with you. Now, you can deduct a portion of that. And of course, there are some stipulations. Let me give you two of them. If you're single, you can deduct up to $12,500. So let's just say you're single and your overtime was $13,000. Guess what? $12,500 of those dollars you can deduct. It's not taxable because it's overtime. If you are married filing jointly and you and your spouse have overtime, collectively, $25,000 of that is going to be a tax deduction for you. So you can't say, well, no, let me take that back. You can say, but it's not going to work. Shavonna, I made $70,000 in overtime. Well, hey, great for you. However, if you're single, you can only deduct $12,500. How are you going to know how much overtime you have? No, it's not going to be on a W-2. That's why your last check stub is going to be so important. That's why that's needed. Now, I'm going to take this time and acknowledge my people that's on here. Yay! Hey, Miss Angel, Angel's Tax Services. And, oh my God, got a special guest on. When he come on the show, he ain't got nothing in the world to do because he is always so busy healing and helping people and bringing them closer to God. My pastor, Pastor Porter. That's what y'all can call him. But I call him Elder Cool Reverend Pastor Porter because that's what he is. And anyone else that's out there watching and I did not call you by name, please forgive me. Again, thank you for tuning in and spending your time with me today. So, those are just some of the tax breaks that we have. I got more for you. Don't even worry about it. Now, every year, we know that the federal government gives out a standard deduction, right? Every year. That amount increases to help taxpayers. It gives you like a tax break, right? So, the standard deduction for 2025, and I'm going to say this with so much love, because I had a client tell me the other day, no, Shavonna, that's not the standard deduction. It is $16,000. No, that's for 2026, which is this year. So that means at the end of this year, when you file your 2026 income tax return, that's what the standard deduction is going to be. But for tax year 2025, here it goes. If you're single, it's $15,750. If you're married, filing jointly, or qualifying surviving spouse, it's $31,500. If you're head of household, it's $23,625. That is the amount that has been allotted to all taxpayers for the standard deduction. Now, there's another deduction in there for my seniors. And of course, the seniors are considered to be a senior if you're over 65. The senior deduction is And you don't have to itemize this. What's so great about it? You can qualify for an additional tax deduction of up to $6,000, and it will apply to anyone over the age of 65 with no itemizing. So that's a plus. You used to have to itemize stuff, and on the federal side, it wasn't always given to you. So that's why it's going to be so important for you to have all of your credentials and information and make sure that it's going to be up to date, because you are helping your preparer as well as your preparer is helping you. Now, time for some more agua. Okay. Now, here we come to, I like to call it the big bounce deduction, because that's what a lot of people look for. Shavonna, what do you mean by big bounce deduction? That's where we get into child tax credit. And Miss Angel, I'm glad you on here listening. Please chime in. Every year we get calls about child tax credit. Where I got 5 kids. Well, I got 6 kids. Well, why I didn't get this much? Why I didn't get that much? This is why I'm here. Because we read the fine print. We talk about the fine print that people overlook. And we talk about those key words that people overlook. We go into detail with that. Shavonna, what do you mean? Well, the child tax credit is now up to $2,200 per qualifying child. Per qualifying child, which means the child has to qualify. Are there rules to that? Yes. Am I going to give you all the rules right now? Absolutely not. Why not? Because that means you need to schedule your consultation with your accountant or your tax preparer. I'm just giving you the updates. Now, however, one of the stipulations is the child must be under 17 as of December 31st, 2025. If that dependent is over 17 and you don't see no child tax credit, don't try to choke your accountant. It's not our fault. I promise you, it's not our fault. We have to follow the rules and the laws. Thank you, Miss Angel. Miss Angel, per qualifying child. That is that key word that we look for. We've noticed a lot of times when all this information goes out to taxpayers, you see that number, but you don't see them words. I can get this much. Listen, I've done it. I can get this much money. What? And then I get there and I'm like, wait, why I can't get it? Well, because you don't qualify. And this is why. You're right. I did not read that fine print. I totally dismissed it. So guess what? That's what we're here for. We're looking at those stipulations and those requirements for you. Earned income credit. I'm going to say that again. Earned income credit. You cannot bring your W-2 and sit down with your, I'm sorry, let me rephrase that. You can do what you like, but it's not acceptable. You cannot walk in and say, I made $30,000 on the W-2 with no withholdings, no dependents, and say, why I didn't get a refund. Absolutely not. Not going to work. No. It's called earned income, which means you earned the income and you paid money into it. That's what that means. It's give and take, give and take. Now, to get the earned income tax credit, here goes. And no, I didn't memorize this, but you'd be surprised. I got a whole book printed that's on my system, bookmark from the Internal Revenue Service, because that's my second Bible. My first Bible was the King James Version. Then the second Bible was the IRS. So, 1, if you have no children, you can potentially qualify for up to $649. If you have one child, you can qualify for up to $4,328. If you qualify for two children, you can qualify for up to $7,152. Now, before I go any further, let me stop right there. I had a client call me the other day and say, Shavonna, I know that I have two kids, so I know that I'm going to automatically get that $7,000. No, ma'am. That does not automatically mean that, because there are stipulations. Well, what are those stipulations, Shavonna? Well, let's talk about your AGI. We don't know what your AGI is, but how much did you make? Because there is a phase out. What is your filing status going to be? Are you head of household, or are you married filing jointly? Are you married filing separately? Do you provide more than 51% of the cost of living for that dependent? So there's a lot of qualifications that go into this for you to qualify for up to that amount. That doesn't mean you're going to get that entire amount. If you have 3 children and they qualify, you can get up to a grand total of $8,046. That does not mean $8,000 per child. Please do not pick up your papers and throw them at me, because if you have 3 children, you are not getting back $24,000. No. Again, up to that amount, you have to qualify. And it depends on certain situations. You have to be able to pass certain tests. That's so very important. So that is for the child income, earned income credit. And there's a lot of phase outs. Okay. So it's a little different this year, but it's also going to be beneficial. I want to stop right here before I go into the next segment. I got a few more people came on. Thank you for tuning in to Let's Talk Finance. Our show today's topic is Let's Talk About This, which is 2025 updates. And we're talking about some of the changes that occurred, that happened in the big, beautiful bill. So thank you for spending your time with me. Please take 2 seconds to hit that share button and share this information, because it's very valid and people need to hear this. It's very important because people now are starting to file their taxes. So please take a few seconds and hit that share button. Also, hey sister, my sister Vanita is on here. Hi Vanita, I love you. Okay. Yes, Miss Angel, you are certainly right. Up to. And she said reading is fundamental. Yes, it is. Absolutely is. But what I learned, reading with understanding is fundamental, because you can read all day long, but if you don't understand what you're reading, it's not fundamental. So I'm with you when you write, and you're right. I'm with you. Now, let's talk about our homeowners. Yes, homeowners. I know you're going to love this. I know you are, especially if you pay taxes, which is the SALT taxes. Yes. Now, there is a cap, but it's been raised. So that's going to benefit you all. Absolutely, it is. So the SALT deduction cap is $40,000 for single filers, head of household, and married filing jointly. Your cap is $40,000, whereas it used to be $20,000. So that's good, because you have a lot of people that pay mortgage insurance and real estate taxes, and them tax bills is high. If you're in Cook County, I know over the past few years, you experienced a lot of increases in your property taxes. So guess what? This is a benefit for you, and this will help you. Now, if you are married filing separately, your cap is at $20,000. versus the 40,000. Okay, so I think that's a big hooray for that. When you come to your preparer, please do not tell your preparer, look, I pay property taxes, I get $40,000. That is not what that means. That means you can get a deduction for up to that, but you are capped at a certain amount depending on your filing status. Another thing that will help you and your tax preparer is if you bring Form 1098, which is your mortgage entrance statement. Got a comment? That's across the board, Benita. It's been upped. That was included in the big beautiful bill that the deduction cap is now 40,000. So if you're single, head of household, married, filing jointly, it's now increased to the 40,000 versus before then it was the 10,000. But if you're married, filing separately, your cap is at 20 grand. So yes, that's going to help a lot of our homeowners because they're looking for those tax breaks. Now, I just want to give you a few more changes and a few more reminders. The first thing is, I know me, I'm very detailed, and I believe that when you come and sit down with someone and you talk about your finances, you're being very intimate with that person. So if someone is rushing you off, that means they only care about the dollar. They don't care about the situation and they don't care about you. As Miss Angel would say, grab your stuff and run. However, I like for you to know what I know. I'm not trying to make you an expert, but God forbid I go out of business tomorrow. Let's just say I become a billionaire and I no longer want to prepare taxes. Let's just say, I don't know, anything could happen. You want to be in a position where if you go to somebody, you can say, look, I don't know everything, but I know this because my preparer explained this to me. What do I mean by that? Why am I saying all that? Review your tax return. Review your latest tax return. Review the last 2 years of tax returns. You want to compare and see where the change is at. If your preparer is not explaining your tax return to you, that's a problem. Yes, we notice that a lot of people don't want to go through the tax return if there's a refund, but that's all the more reason to go through the tax return if there's a refund. Why are you getting this money back? It has to make sense. If you ask those same questions to your preparer when you owe money, you need to have a set of questions that you ask your preparer if you're getting money. Period. It has to make sense. You're welcome, Benita. It has to make sense. So review your tax forms. Review your tax return. If it's not making sense, ask your accountant, ask your preparer, look, this don't make sense to me. Can you break this down? We will break it down to you, whereas to a 6-month-old will understand it and start laughing. We'll do that for you because we want you to understand. The changes that happen, they happen year after year after year because nothing stays the same. Tax laws change every year. I done gave you all about 12 updates so far. That's not even all of the changes that have taken place. There's still additional changes. So it's very, very important that you know what's going on. Now, let me give you one for the books. The IRS is moving away from paper checks. So if you're one of those individuals that do not like giving out your banking information, I know I don't. The IRS is not going to send you a paper check. If you don't have a debit card to put that money on or a bank account, I guess you're just going to leave your money with the Internal Revenue Service. That's what's going to happen because they have officially moved away from paper checks. Direct deposit is strongly encouraged. That's what I have for the changes with the Internal Revenue Service. Last but not least, again, our people, we love you so much. Like, we thrive off of our clients. You guys shape us into the individuals that we want to be, because we want to be better for ourselves, but we also want to be better for you. And although it seems like we can move mountains, it seems like we can take a wand out and do magic and lift that weight off your shoulders. A lot comes with us doing that. And so, Shavonna, why are you saying all this? I want to talk to you all about working with an accounting firm and their team. Boundaries and clarity. All of that comes across the board when you're working with someone. Now, I'll talk about Anointed Accounting. I can't talk about nobody else. I got to talk about me. Now, I know all of my clients individually. I know my clients' children. I know about the dogs. I know about the cats. I know about it all. We have a rapport with our clients. Unfortunately, I'm only one individual. There's only 24 hours in a day. If each one of my clients called and said, I only want to work with you, I only want to work with you, I only want to work with you, you don't leave me any time to do any work because I'm talking to you. Now, let me give you an example. It's this young lady that I love that work at Pete's on 118th and Avenue O. I absolutely love her. And sometimes I try to get to the store when she's there because I want to get in her line. But oftentimes she's pulled off the register. She's not there. She's somewhere else. Am I going to put my groceries back because I can't deal with her? Absolutely not. I'm going to go to the next line. Or if there's too many people in her line, hey, how you doing? Nice seeing you. I see you again. Maybe next time. And I'm going to get in somebody else's line. Trust me, when you're working with Anointed Accounting, when you're working with me, everyone on my team is skilled. They know how to do everything that I know how to do. I have a trusted team of individuals. Just like I can perform magic and move mountains, they can do the same thing. So, with that being said, if I'm not available, please don't curse out the people staff. Please don't send emails to your accountant saying, well, I only want to do this with you, and I only want to do. No, that's not right. We got to be fair across the board. All of us are here collectively to help you. Look at it from this aspect. Let's say it's a Monday, right? You have a consultation. You speak with a member on my team. I'm already working with the client. I'm dealing with the client and I have one waiting. Now you done had your consultation. You done had your meeting. I done received a secured email from the individual you've had your consultation with. Now you're in my queue. I can now go and work on your stuff after I'm done with individual C. If I have any questions, I can now reach out to you. I can talk to you because guess what? That's now our time. But because I'm so confident in my staff, I know they have went above and beyond measure to collect all the source documents necessary. The only thing that I'm going to need to call you about is your banking information. If you get a refund or if you owe, do you want to pay this? Because it's already completed. You done allotted me that time to look for additional tax breaks, tax credits, anything, especially with all the changes that has taken place as of July 4th, 2025. Now, what I love to say, look, it is 72 hours in one whole day, and I can stay up at least 40 of those hours and work with 15 different people. I would love to do that, but unfortunately, the human body just doesn't work like that. Does that mean I no longer love you? Absolutely not. Does that mean I no longer want you as a client? Absolutely not. That means trust me enough to know that I've put you in good hands. Trust me enough. And if I failed you with that individual, I promise you I'll make it up to you. I guarantee you that. That's just how confident I am. Because I know who I am and I know who works for Anointed Accounting. And that's across the board. Whether you go to Jackson Hewitt, H&R Block, Liberty, wherever you go, maybe you may go to your friend in the kitchen. It's something about these people that you trust. And think about it like this. When you go to the big people, you don't get to pick and choose who you want. If you're next in line, you go to the next individual that can take you. You don't know these people, but you're trusting them. So that same level of trust that you're giving them, please allot us that same level, because we're here to work for you, not against you. With that being said, also call now and set up your consultations. Even though you don't have your documents, call now and set up the consultations. For one, you're one step ahead of the game. For two, you allow us to catch any and everything that could potentially happen. Anything. Again, with all the changes that have came about and that are still coming, you want to make sure you're on the right track. So let's just say, let me give you an excellent example. Let's say you're in a rush to file your tax return, right? Now, you've already waited 12 months. One more month isn't going to hurt, but okay, I get it. You want the fruits of your labor. You work for that. I understand that. So now you're ready to file your tax return. You done had your consultation. Maybe it was some things you forgot, even though the questions may have been asked. But again, that's 12 months, 365 days. You probably don't remember every single thing that happened. So you file your tax return. You pay for your tax return. 3 weeks down the line, you get a 1099 or a W-2 in the mail. Guess what? That's an amended tax return. Guess what? That's another fee that you have to pay, because it's not your preparer's fault. It's your fault because you didn't wait and you didn't supply all the necessary documents that were needed. So people, please wait. Not only that, please schedule those consultations, because sometimes those consultations will jog your memory and you will be like, oh yeah, I did do that. Oh yeah, I did do that. Absolutely. Yes. Please set those. Get on your preparer's calendar right now. The calendars are open. Ask those questions. Since we've been meeting since last year, I've been telling everyone, get your questions prepared. Sit and talk to your preparer. If you're like a few of my clients that call me weekly, just because the sun is shining or it's rainy, hey, Shavonna, I don't want nothing, but you said we can call and talk to you. Absolutely. And believe it or not, those calls turn into consultations, because of course money is going to come about in that conversation. So yes, that is very, very, very important to have that information. Your preparer, again, is there to help you, not to hurt you. So my key takeaways for you today out of everything that's been said is organization isn't optional. It's a key to a smoother process, and it brings a peace of mind. Who don't want a peace of mind? Who don't? Especially if you don't like taxes. Especially if you just so stressed out. Who wouldn't want to go drop all of this on somebody else's lap? I'll be the first to tell you I will. I will call Miss Angel or Miss K in a heartbeat and be like, look, listen, I'm not finna do this. I can't do this. But I know you like it, so I'm about to send you this secure email. Give me an ETA when you're going to be done, because I'm not finna do this. But I don't want the stress. So however I give myself enough time to work with them. Because guess what? Even though we're business acquaintances and friends and we love each other, they still got clients. I'm not their only client. They still got other people to work with. So we have to be mindful and work with each other and not against each other. The second takeaway is clarity in your documents and making decisions leads to confidence with your finances. If you clear about it, if you got a good foundation, a solid foundation, if you have that trusted individual that you can talk to, guess what? You're already setting the stone for a peace of mind. It helps. Okay? That's so very important. So very, 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 very important. Now, as we head into the tax season, because it's just kicking off, we're not even in it for real. But as we head into this tax season for 2025, please, individuals, don't wait. Deadlines will come like this. I can remember when I said we got 83 more days before 2026. We got 44 more days. Then it was down to 20. When I looked up, we had like 4 days left. And I was like, well, wait a minute. Where did them 80 days just go? People, we are already in week 2. Week 2 of January. We know time waits on no one. So start getting your documents in order. Start setting those appointments. Make your money mean something to you. Make it work for you. You work for it. Make it work for you. Now, I don't want you to feel stressed because it's tax season. It's tax time. I don't want you to feel that I'm fussing at you because I'm not. I love you. What I want you to do is not wait till April 13th or 14th and call me and say, Shavonna, I'm ready to get my taxes done. I need you to work a miracle because I need to turn this in and submit this to somebody tomorrow at 5 o'clock. What I'm going to tell you is by law, you can give them Form 4868, which is an extension, and we'll revisit this because you're going to now get on the calendar and set an appointment so we can talk about this. That's what Shavonna's going to tell you. What I'm not going to do is rush anything and make a mistake and it's not accurate because I put you and myself at jeopardy. It's not that important. Not at all. So at this time, I want to thank everybody for tuning in. If you stayed, if you didn't stay, if you came by and dropped a comment, like, thank you for spending your Saturday with me. You could have been anywhere doing anything in the world, but you chose to be with me on Let's Talk Finance. Please share this content and take 2 seconds. You never know who needs this information, especially regarding these updates. Please, if you have not subscribed to the YouTube channel, go over to YouTube and subscribe to that channel. www.youtube.com. Put in Anointed Accounting. ANOINTED ACCOUNTING. Hit that subscribe button. I have 33 videos on there already talking about finances. This one will be up and ready within the next hour or so. Until next time, people. Oh, until next time. I cannot wait to see you all next Saturday. Oh, wait, one more thing. I'm on all social media platforms. I forgot about that. Can you believe I'm on social media? Yes. But Anointed Accounting is on all social media platforms under Anointed Accounting. Please follow the page. We put out some good content. Shout out to the business project manager. You know, this stuff takes time. She worked endlessly to get a 36-month plan together, and it is excellent and phenomenal, and we're delivering all this information to you. Please comment on the information, ask questions, share it. We love to engage with you. Follow the page. If you want someone to follow you back, I'll follow you. I don't care. You know something that I probably don't know. Let's help each other. The contact number is 312-837-7219. I am always here to service you and all of your financial and business needs. You do not have to feel alone and stressed. At the beginning of the show, I did say that we would go over the 60 minutes. So thank you for spending the extra 5 minutes with me. I do appreciate it. If you happen to miss the information on live, don't worry about it. It'll be ready for you in a few hours on YouTube. And of course, Facebook keeps it for 30 days. And we also do a replay. So until next time, stay encouraged, stay grateful, and keep walking in your purpose. Remember, Shavana, along with Anointed Accounting and Let's Talk Finance, is here for you. I love you guys. See you in 7 whole days. Hey, and I need a word from you. That's the remix. All right, y'all. Love y'all. Bye.